Imagine, you're at a party. The music is loud, the drinks are flowing, and every expert on the news is telling you the economy is just fine. But if you look at the exit door, the smartest, richest people in the room are quietly slipping out into the night. They aren't leaving because the music stopped. They're leaving because they know the floor is about to give way. Right now, gold is hitting all-time highs, and it's doing it in a way that should be physically impossible. If you ask the news, they'll tell you it's inflation. They're wrong. Today, we're looking at the silent breakup that is changing the world's money forever. For 50 years, gold followed one simple rule. It was the anti-dollar. When interest rates went up, gold went down. Why hold a yellow rock that pays 0% interest when you could hold a U.S. bond that pays 5%? But recently, that rule didn't just break, it evaporated. Interest rates stayed high, the dollar stayed strong, yet gold kept smashing records. If it's not interest rates and it's not inflation, then what is it? The real story isn't about shiny metal, it's about a messy, global divorce. Since 1945, the US dollar has been the world's reserve currency. If you were a country, you saved in dollars. But lately, the world saw something that scared them. They saw the US freeze the bank accounts of other nations. Suddenly, every central bank on Earth realized that their savings in dollars weren't actually theirs. They were just permission slips. So the bank started a quiet exit. In the last few years, central banks have been buying gold at a rate we haven't seen since the 1960s. We're talking over 1,000 tons of gold a year. They aren't buying it because they love jewelry. They're buying it because gold is the only financial asset in the world that does not have a return address. It doesn't require a bank's permission to exist. So where does this leave us in February 2026? The media wants you to focus on the price of gold, but you should be focusing on the why. Gold isn't getting more expensive. The trust in our paper systems is getting cheaper. When the biggest banks in the world start trading their paper promises for physical reality, it's time to pay attention. You don't have to be a doomsday prepper to see the trend. You just have to watch where the smart money is heading while everyone else is still dancing at the party. The silent breakup is happening. It's slow, it's quiet, and it's 100% real. The question is, if the bankers are leaving the party, why are you still standing in the middle of the dance floor? Stay casual, stay informed. I'll see you in the next one.